Hey everyone, welcome back. SoFi Technologies just released its Q4 2025 earnings on Friday, and our preview aligned very well with the actual print. No major surprises either way. The stock's reaction has been a bit choppy, but let's jump straight into the key part, the 2026 guidance and what it means going forward. As always, this is just the facts and some context, no investment advice here. Management provided guidance that is intentionally conservative, as SoFi has historically done to leave room for upside. For full year 2026, they guided adjusted net revenue to approximately $4.655 billion, which represents about 30% growth from 2025 and adjusted EPS around 60 cents. For Q1 2026 specifically, they call for revenue around $1.04 billion and EPS 12 cents. Historically, SoFi has guided on the cautious side and then beaten or raised throughout the year, consistently outperforming their initial outlooks by widening margins, accelerating member adds, or capturing more fee revenue than anticipated. In recent years, they've often delivered 5 to 15% plus above initial full-year revenue guidance and meaningful EPS upside from better than expected cross-sell and operating efficiency. If that pattern continues, and with strong demand signals in lending, financial services growing over 40% in segments and capital from recent raises supporting expansion, a more realistic 2026 outcome could land closer to $4.8 billion to $5 billion in revenue and 65 to 70 cents in EPS. That's not aggressive, it's simply assuming they execute as they have in the past. Now, on valuation, SoFi's current forward PE, based on consensus 2026 EPS estimates around 60 cents, sits at about 38.43x, with the stock trading around $22 to $23 after the post-print dip. That's noticeably lower than the 40 to 60x average we've seen in recent years during growth phases. In fact, looking back, SoFi has traded at forward PE multiples as high as 60x, and briefly even 70x in some hype periods in 2024 to 2025, when member growth was accelerating fastest and market sentiment was very bullish on the profitability ramp. Dips have frequently brought it down to 30, 40x, which is exactly where we are now. If we take their guided 60 cents EPS and apply a reasonable multiple, say 40, 50x forward, that implies a price range of roughly $24 to $30 per share by end 2026 or so. If we stretch to the higher end of its historical range, 50, 60x, which has occurred during strong momentum periods, you're looking at $30 to $36. And if we use our realistic beat scenario, 65 to 70 cents EPS, even at 50, 60x, that would point to $32.5 to $42 per share. At current levels, the stock sits at the lower end of its own historical forward PE range, making it look more reasonable relative to its track record, especially if growth sustains and they outperform the cautious guide once again. Bottom line, the 2026 guidance is built with cushion, leaving plenty of room for upside if execution stays strong. One print or one dip doesn't change the bigger picture. If SoFi continues to scale members, products, and margins, the path to significantly higher value remains very much open. Volatility is just part of the ride in this space. What do you think? Conservative guide or another year of beating expectations? Drop your thoughts below. Like if this helped clarify the outlook, and subscribe for the next update. Catch you soon. Stay sharp.